the whole idea of buying and building assets that generate income and cash flow for you, so that I would have a lot of diversification in my income sources. And so that's what led me to this world of alternative investments.
Hi, this is Garrett Sutton, and you're listening to the Average Joe Finances Podcast.
If you're watching this on YouTube, make sure you smash the like and subscribe buttons. If you're listening to our podcast, go leave us a 5-star review. All of our links can be found in the video description or show notes below. Hey, welcome back to the Average Joe Finances Podcast. I'm your host, Mike Cavagioni, and today's guest is Fred Moskowitz, and we're going to be talking about note investing, which I'm pretty excited to talk about. So Fred, thank you so much for joining me today.
Thank you, Mike. It's great to be here.
Yeah, absolutely. It's great to have you here. Now, there's a long distance between us, but I think you've been enjoying some of that heat recently. I saw what's been going on the East Coast and back on the mainland.
Yeah.
You guys have been getting slammed with some hot weather.
Yeah,
It's actually been
pretty
cooler here in
intense.
Hawaii.
Nice.
So,
Nice.
okay. So, Fred, I want to start this off the same way I start every podcast episode. And we want to know more about you. So if you could share a little bit about yourself, tell us your story. Who is Fred Moskowitz?
Yeah, happy to share a little bit about myself. I'll tell you, Mike, going back, I started out in life having a really long and successful career working as a computer engineer. And I spent many years working at different tech companies, technology companies, startup companies. And what happened, Mike, was I watched my entire industry get flipped upside down during the bursting of the dot-com bubble. We had that massive rise, the dot-com boom, and then followed by the bursting of the dot-com bubble. And right around that same time, we had the September 11th terrorist attacks right around the same time. And so there was so much turmoil in the world. And I realized through all of this that I was way too dependent on the income for my job. I loved the work I was doing, but my job always had all of these circumstances completely out of my control. And Mike, let me tell you, I learned that no matter how talented of an engineer I was or how valuable of an employee I was, if things were not going well in the company or in the economy, I could quickly lose my job through no fault of my own. And what I decided to do was to take action, and I wanted to start building an investment portfolio, but I was interested in alternative investments, the whole idea of buying and building assets that generate income and cash flow for you, so that I would have a lot of diversification in my income sources. And so that's what led me to this world of alternative investments. Got involved in real estate, doing real estate, building a portfolio of rental properties and other investments. And after a few years, I got involved in mortgage note investing. And mortgage note investing, what I found was a really interesting part of the real estate investing, but it's a niche area. Not too many people talked about it. If you buy a real estate book, there might be like a mention of it in the book in the back, talking about selling a property with owner financing. But I found this industry fascinating, and over the years grew and expanded, and it's been a wonderful journey for me.
Yeah, Fred, that's amazing. Actually, it's funny because I'm working a deal right now where we're looking to do some seller financing on it,
Oh,
and then the seller carry a note in second lien position. So I think that's
Great.
it's perfect timing to have you on the show here.
Yeah, it's a great strategy. It really is. And I feel that it doesn't get utilized enough. It's all part of doing creative deals when you're putting together a transaction. Now, the area I focus in specifically is we buy bank originated, institutionally originated notes.
Okay.
So they're the seller finance notes that's out there for sure. And that's a separate niche that I know many colleagues in the industry that focus on that. But I focus on institutionally originated notes. And as a result, we're buying all over the country, nationwide. And as you can imagine, I'm sure most people can relate. You go, you buy a property or you refinance a property, right? And within a month or 3, you get a letter from the lender saying, "Dear Mr. and Mrs. Homeowner, we're writing to let you know that your loan is being sold. And here's the address of the new lender. Here's their contact information. Starting next month, please send your payments to the new lender." Right. And so there's a secondary market for mortgage notes where notes get bought and sold every single day.
Right. Yeah, that's awesome. Now, I want to ask you, Fred, too, because you said that you were involved in real estate in general. So you had rental properties, you had a whole portfolio going, and then you discovered mortgage note investing. What is mortgage note investing to you, and why did you decide to focus your attention on that?
Mortgage note investing is where instead of investing in the real estate and owning the property, we're talking about investing in the paper. And that is the notes and mortgages associated with all of those properties. And I find that it's a really interesting part of the real estate business. And a lot of real estate investors don't pay any attention to it. Most people, when they think of a note and a mortgage, they think of being the borrower and not as being the lender. But what happens with note investing is it allows you to step across the aisle and become the bank. And when you do that, you transition from being the one making the monthly payments to being the one receiving the monthly payments. And I found it's just a great way to increase the predictability of your cash flow. But what was attractive to me was that I saw that this is something you could really grow and scale up into something big relatively quickly. And because of the different vendors we use and service providers, you can ramp up a large portfolio very quickly, which is something you cannot do with acquiring single family rental properties, for instance.
And not unless you
You
buy a full portfolio from somebody that's exiting. And that's very
Yeah,
hard to
yeah.
do.
But I like it. Owning real estate is a great asset, but this is some diversification. And you're dealing with a different, instead of dealing with tenants, right? You have the tenant mindset. Now you're dealing with homeowners who have a different mindset. Homeowners, when the air conditioning system breaks down, they don't call the lender to get it fixed, or if the water heater uh, gives out, they don't call the lender. They go and they take care of it. And so you're dealing with owners, property owners are responsible. They show pride of ownership. They take care of the asset. And the lender is secured on title. Their investment is protected. And it's, for the most part, it's hands off. All the work you do is in the beginning, it's up front. When you do your due diligence, evaluating the note before you buy, that's where all the work goes in. And then the ongoing management, the day to day, it's handled through using loan servicing companies. They manage the note on behalf of the lender. And so this is how you can really scale up a large portfolio.
Yeah. So speaking of doing that and scaling, right now you have the service that provides that helps the lender out with doing all of the service. But what kind of time requirement are you looking at being the lender yourself, what kind
Yeah.
of time are you actually putting into the business?
There's multiple ways. Let me jump back a little bit. Like, how does someone get involved in note investing? There's really two ways. And so for each investor, I always teach about this, and I written about this in my book on note investing. You have to decide whether you want to be active and hands-on in the business, and it is an active business, very, or if you want to be a passive investor, then maybe you're not going to go out and build a portfolio of notes, but you can invest in a note fund. A note fund is managed by the fund managers. They go out and raise capital, and then they go and buy notes in bulk quantity. And the benefit there is that for the investors, they get to rely on the fund manager's expertise, their experience, their relationships, the access to buying notes, and they receive a passive income for that. It's cash flow. And so it's a good match. And so you can go either way. There's no right or wrong answer. It comes down to how much time do you have? How much time do you have available? If you're a busy entrepreneur or busy professional and you want to focus on what your expertise is in, then be a passive investor. For a lot of people, it's a great way to go. And you can invest in a note fund. There's many different funds out there that all have different characteristics. And that's great. That's a great way to go. But if you want to be active as a note investor, then yeah, get involved in the industry, get yourself educated, and build relationships, which is what you need to be able to buy notes.
Yeah, I didn't even think about that. That the fact that you can invest into a fund with a manager that's managing all these different notes, similar to how you would invest in a real estate fund. And
Yeah.
that's really
Mhm.
interesting
Yeah,
because
it's set up very much like real estate syndications are. Absolutely.
yeah. So Fred, one of the things I'm curious about is when you look at interest rates and you look at,
Mhm.
okay, people are getting loans right now between 5 and 7%, depending on if it's their primary or rental property, whatever it is, it might be.
Yeah.
Um, Now you look at that as you being the note investor. Okay, that's a 5% return. However, comma, it's a 5%. Now the debt is amortized, right?
It is.
So
Yes.
how much big of a difference does that actually make when you're looking at, okay, getting 5% return is great and all, but it's a lot different than just like a 5% return from like the stock market.
Yeah, absolutely. So you're correct. When you receive note payments, it's per the amortization schedule, and you can buy a note that's has 30 years ahead of it, 30 years of payments coming up, or you could buy another note that was a 30-year note, but there's only 5 years left of payments on it. So according to the amortization schedule, each payment you receive, each monthly payment, consists of interest and a portion of your principal back. And so the value of the note, the loan balance, decreases over time. And so you actually have an asset that's going down in value. However, you're recouping your capital a little bit at a time. Now, another important point with note investing is notes are customarily bought and sold at a discount. They're sold for less than the amount owed. So a note with $100,000 loan balance might be sold for 94,000 or 90,000 or maybe 80,000. That depends on many characteristics of the note, the risk of it, track record, and how good of a negotiator you are. Are you buying one note or are you buying a pool of 20? Because if you're buying in volume, you can negotiate better discounts as well. All of these things impact it. And so that note that you said was 7%, if you bought it at a discount, your effective yield might be 8, 9, or 10%. And so that's how
Right. And if
it's
there's enough time
impacted.
on the amortization schedule, it's even higher than that.
Yeah,
With at
there's a
least the
lot of
immediate return.
factors.
Yeah.
When you're analyzing a note, you get good at using financial calculator, and understanding the 5 buttons at the top row of the financial calculator, how those work, because you use that's what allows you to compare one note against the other and see which one's going to be the most suitable for what you're looking for.
Yeah, I've never done it with the calculator. I always had to do it with pencil and paper because when I was taking my real estate exam, they give us an amortization table, but we had to do all the math in our heads, or we weren't
Yeah,
allowed to use the calculator. It's interesting though, because I never really thought about how beneficial note investing could be or how lucrative it could be, right? Until I actually sat down and looked at my own mortgage amortization and looking at my monthly payment on my mortgage, how much of it is interest versus how much of it is
yeah,
principal. Well, all that interest is what the lender's pocketing, right? That's their
exactly,
return right there.
exactly.
And that's really amazing. So they're getting their money back up front, right? And then they pay off what they lent. And then
Yep,
after that, it's just all profit.
yeah,
So yeah, that's
exactly.
yeah.
And
I just
what
thought that was
happens
very
a
interesting.
lot,
So it's definitely
yeah,
a higher rate of return than just like 7%.
it is.
Yeah.
Yeah,
Okay. Yeah. I just wanted to put that out there because when it comes to mortgage amortization, it could get very complicated. So I
oh,
was trying to make sure it's explained in the simplest terms possible so that someone that's listening to this might be like, oh, okay, I get it. They've never looked at an amortization schedule before. Okay, that's awesome. Now, Fred, I want to ask you, besides that, I know on the real estate side as an investor, you get different kind of tax benefits and write-offs, different things like that. Is there
yeah.
anything you get as a note investor that you're able to write off, or are you just eating the bag here?
Yeah, this is a great question. So is there anything you get? You get 2 things, Mike. You ready?
Yeah, I'm ready. Let's go. What are the two
Capital
things?
gains and interest income. Both are taxable events. So you get a lot of tax liability from note investing for sure. There's no deductions, no depreciation, none of that. So, one of my favorite strategies for note investing that I always teach about and speak about, and I actually have multiple chapters of my book dedicated to this, is if you can, and you're going to do note investing, whether you're buying individual notes or investing in a note fund, can you do it in your self-directed retirement account? Preferably a Roth IRA or a Roth 401k. And the reason for that is all of that tax liability, it's shielded because you have preferential tax treatment on those accounts. And a lot of people have they have an old 401k from a prior employer, or they have an IRA. And so that's a great source of capital to use for note investing because, like I said, you're generating tax liability through it. Absolutely. And so putting those two tools together is a really powerful combination.
Yeah, being able to utilize your 401k and IRA, especially a Roth IRA for the tax benefits is something that is powerful in so many different ways. You could use it to invest in multifamily syndications or to buy real estate in general. You could do it for note investing. I had a guest on recently where we were talking about how you can use it to start a franchise, right? So
Yep.
there's just so many different ways that you can utilize that. Obviously, you need to talk to a CPA, get the right lawyer on your team to make sure that they build it out correctly so that the IRS doesn't come after you. But
Yeah.
there are ways to make that happen. So that's very good to know for somebody that might be looking at a way to get a better return on their 401k or IRA rather than it just
Absolutely.
sitting in like index funds, right?
Yeah, exactly. Or for someone that's looking to diversify out of the stock market. But I always recommend, if this is something you want to explore, set yourself up with a good IRA custodian, self-directed IRA custodian. There's many different ones that do a good job. They will help you with the compliance and the rules and keep you from doing things you're not supposed to with your self-directed accounts so that everything is in compliance with the IRS rules. And they help you. They help you. That's their expertise. They do this every day. So that's an important relationship to establish if it's something that you might pursue. But let me tell you, I have seen investors grow their self-directed accounts tremendously. The rate of growth, when you compound that over time, it's exponential, and that's powerful. It's really
Yeah,
powerful.
it sounds powerful. So speaking of note investment funds, from what I understand, you have your own fund as well, right? So you have your own note fund. Running that, what are some of the trends that you're seeing right now with mortgage notes, with what's happening in real estate?
Yeah, there's some interesting trends for sure that I can talk about. First of all, there is a lot of capital that's chasing after assets of all kinds, whether it be real estate or private equity deals, mortgage notes. Their money is seeking a decent rate of return. I feel like more so than ever.
Yeah.
And so people are looking for that. People are looking for ways to go outside the customary practices, to do things other than, hey, I'm investing in my 401k at work. And all I have as far as choices is like a half dozen options to select from different funds. But guess what? It's 100% in the stock market. So there's no diversification there for sure. Some other trends, Mike, we've just had an amazing run of refinancing and loan payoffs over the past several years. It's been like nothing I've ever seen. I've been investing in notes for the past 13 years and never had seen that so many loans. We would sometimes buy a note and then the next month it would pay off.
Oh, wow.
And yeah, and so there's an element of randomness with note investing because notes can get paid off at any time and you never know when that
So
happens.
so what happens when you buy that note that pays off so fast? Hopefully you got it at a discount, so you're at least getting some type of profit.
Exactly. That's how capital gains happens. Is let's say you bought a note, $100,000 loan balance, you bought it for 95, and then the loan gets paid off. It gets paid off at 100,000. And so you get that 5,000 is profit immediately. And that can create capital gains. So it's a good problem to have, but that's been a boom we've seen over the past few years. But now we have a different interest rate environment. Interest rates have been rising, and that certainly impacts pricing on notes. The pricing varies, but always notes are available to buy and to be sold. Their notes are being sold. That secondary market is very active no matter what.
Yeah. Is it common, or have you seen people buy notes for higher than what's owed on the note just because it's a very young loan? Let's say a 30-year mortgage, and it's for 100,000, but somebody would maybe offer 110 because they know with the interest they'll make over the next couple of years that it's going to be a great run for them. And
That
also the person selling the note is, I'm not selling it for 100.
that can certainly happen. As I said, it's whatever the buyer and seller agree to.
Okay.
Yeah.
I'm just saying, have you seen that? Is it like common practice? I'm just asking out of my own curiosity when it comes to note investing, because in my head, the way I look at it, $100,000 loan at 30 years is valued much higher than $100,000, in my own opinion, just based off of the amortization and how much interest will be paid over the life of that loan.
Yes.
And it just makes me curious as to if that's something that's pretty common practice.
It happens from time to time, but the most common is that there is a discount
Okay, nice.
given. Yeah.
That's even better. I
Yeah.
like discounts.
Yeah. Let's face it, for real estate, for anyone in the real estate investing space, isn't that always the objective, to buy a property at less than market value? Right. And
Absolutely.
people
Yeah, you wanna do the
negotiate
same
and
thing with a real estate with a mortgage note.
yeah, yeah. But with mortgage notes, it's common practice. So that's certainly something that can be appealing.
Okay, right on. Now, Fred, I know that you speak at several conferences and you wrote a book as well about this, and you train investors on how to do this. If there was somebody that came to you today, Fred, and they said, you know what, I think I want to sell a couple of my real estate assets
Mhm.
and get into mortgage note investing, would you tell them, hey, it'll be great to buy a couple notes, or would you recommend that they start off maybe going to a fund just to get the feel for it?
Yeah, that's a very personal question. Either way is good. I've seen some investors start out getting involved in note investing by getting into a fund, and that's great. You learn a lot. You can see how things work. You can get comfortable with the asset class. And then I've seen many investors, they start out with a fund, and then after some time, they transition to buying individual notes and building a portfolio. Now, conversely, I've seen it happen the other way around as well. Someone has very successful note investing business for many years. Maybe they get a little older and they want to work less and take it down a few notches. So they transition into a fund because they know the asset class, they like it, but it's less hands on for them. And so that works out. And so it just depends on what your goals, your objectives are, and how much time do you have. But either way is great.
Okay, no, great. I appreciate that. Now, this is like a personal question for you too. From when you got started to where you're at now, are there any specific CRMs or tools that you use that you think are very valuable to somebody that's a mortgage note investor?
Yeah, absolutely. CRMs, customer relationship manager, very important tool. I use multiple CRMs. We use one that's been customized for note investing, for handling all the details about each note. But I also use CRM for keeping in touch with the people that we conduct business with, trading partners, note sellers, note buyers, investors. It's something, no matter what business you're in, use a CRM so that you can keep track of your conversations. You can reach out to people on a periodic basis, and it helps to be top of mind. It really does. And so it doesn't matter which one you were, I think your question might be around which one. It doesn't
Yeah.
matter.
You
The
said
best
something, Fred.
CRM,
You said
yeah,
something that really sticks out to me that I want to jump on, that you
mhm,
said it pays to be top of mind. And I
yeah,
really like that because that's one of the things that I talk about when it comes to building relationships, when you're building your network out, it is very important that you remember certain things about individuals so that when you talk with them, you could bring that up and then they realize, okay, this guy actually cares about what I'm doing. One of the things, an
and
example that I use when you go to a conference, I always tell people, try to find at least 2 to 5 people that you definitely want to stay in touch with. And you have a great CRM system right there in your pocket, this thing right here.
yeah,
Because when you create their contact info, there's a little spot down there, like besides the websites and all that other stuff you can add, there's a spot that says notes.
yeah.
And you could put notes in there about what you talked to that individual at the conference about and everything. And
What
then you could
asset
pull it up.
class they're
Yeah, yeah. You
active
could pull
in,
it up,
all
read it
all
real
of that.
quick, and give them a call and say, hey, I remember you
Yeah.
told me that your son, little Timmy, was playing in a soccer tournament for the championships. Did they win? How'd it go? They're like, wait, this is who? Oh, yeah, from
And
the
the
conference.
best thing
You
is,
remember that? Oh, okay.
but more than that is the conversation you had, maybe it was 3 or 6 months ago,
Mhm.
you can continue right where you left off,
Exactly.
which is wonderful. And I love what you said, Mike, the idea of when you go to a conference or an event, that you're strategic about networking, because that's one of the most important things is the relationships you build from going to a place where there's 300, 500, 1,000 like-minded individuals that are interested in the same topics as you are. That's amazing networking opportunities. And so never lose sight of that.
Yeah,
I mean,
it's easy to get bogged down on the number of people, which is why I say 2 to 5 max. If you try to
yeah, go
get
deep.
everyone's info and just collect a bunch of business cards, you're not going to keep in touch with all those people. Get with
You
people
you
that have
can
the same goals as you, that are like-minded, same doing the same thing you're doing, and really connect with them and build a relationship.
absolutely. I love that.
Yeah, awesome. Okay, Fred, I've got one more question I want to ask you before we take this into the final round.
Okay.
And this question is based off of the different things that you've done in your investing career, right? So you've done real estate, you've done other alternative investments besides mortgage
Mhm.
note investing. But I want to know, on top of everything, what is your why for doing what you do with your investments?
My why is it's to make an impact. I want to make an impact to the people around me. And so that's why I really love speaking and teaching and sharing of ideas. I feel that so many people, there are, they have a thirst for knowledge, want to learn. Maybe they don't know anyone in their immediate circle that is involved in investing, involved in real estate. And so people are seeking to learn. And so I love networking, building relationships, and sharing some of these concepts and strategies. And so I do that through my body of work, through my book, through speaking, through doing podcasts, so many ways. But the most rewarding thing for me, Mike, is when someone comes to me and says, Fred, I put into practice the things I've learned, and now my cash flow is diversified and I have so many more options in life. And so you can start to see how people shift and change and grow and expand. And it's a beautiful thing. And I love that.
I too love that, Fred. That's a great answer. And it, I was just talking with somebody about this as a guest on their podcast about one of the things that I've loved about since I started my podcast. Yeah, getting reviews on the show is great. Sure, whatever. It's a review, right? You're going to get reviews. You're going to get good ones. You're going to get bad ones. People are going to say what they're going to say. When I get a DM on Instagram or LinkedIn or Facebook, or just somebody just messages me or shoots me an email and says, "Hey, Mike, that episode you did with so and so, I learned so much and I put this into practice and now I'm doing this and now I'm doing that and man, my whole life has changed." That to me is more impactful than
Yeah.
anything else. If I My whole intention with this podcast was to help people with financial literacy, learn about alternative investments, how to build their wealth, get out of the rat race, right? And if
Mhm.
I can impact one person, then I feel like I've done my job. But now my podcast reaches thousands of people a month, which is just amazing to me. And again, out of those thousands of people, I could care less as long as I impact one person, then I know I'm making a difference in this world. And that's to me what matters and why I do what I do. The fact that you have a very similar like-mindedness when it comes to that is very heartwarming, and it tells me how genuine you are, Fred. So I definitely really appreciate that.
Thank you. I appreciate that compliment. Thank you.
Absolutely. So, Fred, with that compliment to the side, I would like to now transition this to the final round, where I'm going to ask you the same 4 questions I ask everybody that comes on the show, and it gives us a good idea of how you are under a little bit of pressure. So, if you're ready to go, we'll get that party started.
Yeah, let's jump in.
Okay, let's jump in. And the questions ain't that bad. I like to scare you a little bit before we start. Okay, Fred, the first question of the final round is, what's the biggest mistake you've ever made when it comes to your finances, investing, real estate, or just business in general?
Wow. Biggest mistake I've ever made was this. In the beginning, I was trying to do everything myself. And I find that for
I feel that
entrepreneurs,
spiritually.
yeah, entrepreneurs, it's natural. It's natural. And when you can build a team, when you can partner or have hire vendors or employees to help you, that and that they're good, right? Here's the thing, find the things that you're doing that you're not good at and pass it on to someone else. Hire the right people or outsource it to the right company that can handle it for you, where that's their expertise. And that's going to free you up to do what you're uniquely good at. And it's something that took a while for me to learn that lesson the
Yeah.
hard way. But
Oh man,
yeah,
that answer gives me goosebumps because I went through the same thing. It is so hard sometimes as an entrepreneur to give up that power, right?
give up
That
control.
responsibility and that
Mhm.
control that you have over your own business or
Yeah.
something that you're working on. So yeah, that I love that answer. Thank
But the best way to start is it's through the relationships you have. Ask people, hey, do you know someone that's good at managing my social media because I'm not good at it? And then they'll make you introduction. Hey, do you know someone that is a good accountant, a good CPA? Yeah, absolutely. And you know what? Accountants and CPAs, they're like the best people to ask for referrals from. They know everyone.
Oh yeah.
Whatever you need, yeah, they're very well connected. So that's a great source of introductions that for whatever you need in your business, because CPAs work with business owners, small business owners, and that's something, just start doing that from the beginning.
Yeah, that's one of those things that I love about what I'm doing too with the podcast is just the network I've built. I like to say that, hey, if somebody needs something, hey, I know a guy or a gal, and
Mhm.
that's my favorite thing to say. Hey, oh, I know a guy or gal that could help you with that. Yeah, but that's the power of networking, right?
It
Um,
is.
okay, Fred. So this next question, these all kind of tie into each other. So, second question of the final round for you is: what is something that you've learned that you wish you knew when you first got started? And we'll say when you first got started in note investing.
Something I learned was the power of getting around people that are already at a higher level than you are, right? So if you're wherever you seek to be, you aspire to be, find people that are already there and build a relationship with them, be of service, get around them, spend time with them, because what happens is you're going to start to have higher level conversations. They're going to have different problems, right? If you have $100,000 a year business and you start hanging around with people that have $1 million a year business, they're going to have very different problems they're solving and talking about. And so the conversations shift. They're going to introduce you to great people and invite you to amazing events that maybe you otherwise wouldn't have known about. And so that starts to shift because it puts you in a different game. And
I love that, Fred. I
yeah,
absolutely love that because it's who is it? Jim Rohn that said it, right? If you're the average of the five people you hang around the most. So if
that's
you're hanging out with
correct.
five millionaires, you're going to be the sixth one, right?
Yeah.
Because you start getting involved in those conversations and seeing what they do differently at that level. And then you could take some of that and put it into your business because all it is from that $100,000 business to $1 million business is two more zeros. That's it. And that's just showing to you, I'm sorry, one more zero, not two more zeros. That's multi-million, but it's just another zero that's added on the back end. So if you look at it that way and just say, okay, this is where I want to be. These are the people I'm going to be around. That is powerful for
Yeah.
sure. Okay. So Fred, the third question of the final round is, do you have any tips or tricks that you would recommend to someone that is just getting started out today?
Yeah, absolutely. The best thing you can do is get good at networking. If it's something you're good at, take it to the next level. But here's the thing, we touched on this earlier. Find the top conferences and events that are in your industry and go attend them. Spend the money. It might cost you a couple $1,000s to travel and a hotel and a few days of time. And yes, it's a heavy lift for sure. But the people that you meet at those events can change your trajectory of your business. And if you're getting started out, there's a lot of education opportunities. So you're at a conference, you have different speakers, you can learn from the top people in the field and maybe meet them, because you go to the cocktail session and oh, the speaker that was on stage this afternoon, he's sitting right next to me. Well, now you can have a conversation and share with them what you're doing. That's powerful. And
Yeah.
don't be shy about spending money and time in the beginning to invest in that, because that's going to really ramp up your trajectory.
That's the key word, invest, right? You're investing in yourself by doing
Yes.
that. And the return you get on that investment is infinite, because the people that you're going to meet, the network that you're going to build, as long as you are active, don't be one of those people that buys the ticket from the conference, sits in the back, takes a couple notes, and then doesn't talk to anybody. You see them at all the conferences. Don't be that person. Be the person that goes and sits up front and is attentive and talking with other people about what they may have just learned at this conference, and ask other people, what have you learned? The last conference I was at, we have a WhatsApp chat and they're just going at it about holding each other accountable and everything else. It's fantastic. And I
Nice.
love seeing things like that. And
Yeah, those are the great things that
yeah,
happen.
and
Yeah.
those are the folks that got the most out of the conference. And yeah, so I'm 100% with you there. You got to invest in yourself. You have to, pay for that upfront education or conference, or go to the meetups, put yourself out there, right?
Yeah.
Okay. So Fred, this is it. This is the final question of the final round. And I will preface it with, besides your own, because I know you wrote your own book, but besides your own, do you have a favorite business, investing, or real estate related book or podcast, or both?
Mm, that's a tough question. There's so many to pick from. So what comes to mind? I'll give you a couple.
Besides Average Joe Finances.
One of my favorite business books is The Ultimate Sales Machine by Chet Holmes. This is a book that came out decades ago. It's a classic. And for someone like me that was an engineer and I had a complete technical background, never worked in sales a day of my life, when I ventured out into the investment space, I found that, yeah, I'm in sales now. So I had to learn on my own. And so that book is very powerful. And it's like the Bible of sales, been around for decades.
Yeah.
Another book that I found to be very impactful is Atomic Habits. Atomic Habits, which is all about productivity and building momentum, by James Clear is the author. And he breaks down the strategies. He talks about the concept of whatever habit you want to build, start small. Make it something you can do in 2 or 3 minutes, but do it consistently every day. And then over time, that builds and grows and builds momentum. Those are some books that have been very impactful for me.
Yeah, Fred, those are great recommendations. I don't think I've had The Ultimate Sales Machine recommended here before. Atomic Habits, definitely. But both of those, both of those got to get onto my list for sure.
Yeah.
So, okay, right on. That was it for the final round, and you survived. Great job. Now, I do have another question for you, and this is the most important question I'm going to ask you throughout this entire interview.
All right.
And it's because of the fact that we've had a great conversation. You've put a lot of golden nuggets out there. You've really piqued my interest, and probably a lot of my listeners' interest in mortgage note investing. So people are going to want to learn a little bit more about that, because we touched up top here at the 100,000-foot level, and they might want to get down into the weeds with you. So where can people find more information about you? Do you have a website you could share with us, social media, and where can we get your book? And what's the name of your?
Thank you. Thank you, Mike. The name of my book is The Little Green Book of Note Investing. It's available on Amazon. You can find it there either by typing in the title or my name. It will come up. The Little Green Book of Note Investing. And for anyone that would like to connect with me, I invite you to visit my website, which is fredmoskowitz.com. You can connect with me there. And if you prefer a little easier spelling, you can visit giftfromfred.com. It'll take you right to my website. It's a lot easier to spell. And once you're there, you can sign up to receive my newsletter. You can connect with me. And I have a special report about note investing that I'm happy to send out by email to anyone that would like to request it. I always love connecting with investors, building relationships. So I look forward to hearing from you. And if you prefer to text me, we can do that too by texting the keyword money to the phone number 215-461-4433, and then just follow the prompts. So I look forward to connecting with you. Please reach out. Happy to serve in any way I can. And it's been a wonderful interview, Mike. Thank you so much.
Yeah, Fred, it truly has been wonderful. And I want to make sure, just so you know, we're going to have all those links and the phone number in the show notes to make it easy for our listeners to go ahead and copy and paste or click away. The only thing I ask is please don't do it if you're driving right now. So,
Definitely.
Fred, super excited to learn about you, to learn more about note investing. This was really fun for me. I feel like I've learned a lot. And if I've learned a lot, I'm sure my listeners also have learned a
I'm
lot.
happy.
And
So
I
happy to
I
hear
really
that.
hope that you hear from some of them, because this is a pretty lucrative alternative investment to get into for sure.
Yeah, that's great. I'm so happy to hear that. And yeah, it's a great asset class. It's powerful. And I feel that it deserves consideration
Yeah.
in just about everyone's investment portfolio.
Yeah. Hey, diversify, right? Fred, again, thank you so much for taking the time out of your day to join me today. I also want to thank all of my listeners. Just thank you all so much for joining me and our special guest, Fred Moskowitz, on the Average Joe Finances podcast. Go leave us a 5-star review and tell us what you liked about today's episode with Fred. Aloha from Hawaii, and have a great rest of your day. Thank you for making it to the end of this episode. Greatly appreciate you being here with me today on the Average Joe Finances podcast. If you haven't done so yet, make this the episode that you go leave us a 5-star rating or subscribe to our YouTube channel. The Average Joe Finances podcast is for informational and entertainment purposes only. Have an outstanding day.